All right, good evening. Today's focus will be on the technical analysis portion, which we look into the charts. Okay, I'm gonna share with you the principles of edit wave based on technical analysis. So we'll spend perhaps about like 20 minutes to walk through the principles, the concepts of how we use it to analyze the market so that you also learn from it. And then after that, we'll use the remaining time to apply it directly into a live market environment, where I'll also share with you some opportunities for this week. Okay. And when we talk about price action over here, the first thing you need to identify and being able to differentiate the price movement in the market is this two market movement that I've put it up onto the screen. It's called impulse versus correction. Yeah. So what is impulse? Impulse are basically movement in the market that are strong in momentum. So if you're actually monitoring the market last Tuesday when we have CPI data comes in from the US, which was very, very positive as compared to the forecasted data, right? And that's where the dollar strengthened significantly. Those move itself are what we call impulses. Okay, very, very obvious. Okay, later I'll show you some of the examples in the charts, and then you understand it better from a visual perspective as well. Right, but you need to understand that impulse can be up, can be down. We're not too particular of the direction for this case here, but it's more of asking this question: how did price develop? Did it develop in a very fast way, or did it develop in a slow way? So if it's fast, that means strong momentum, and therefore we categorize that as impulses, right? So we always ask this question, like, how did price develop, right? Is it fast or is it slow? So when we are talking about impulses and correction, we are always answering this question: how did price develop? Okay. So if you take a look at the example over here, as the market comes down, you do see that it came down pretty fast, right? And if you're familiar with price action, it's basically huge candle. That kind of indicates the momentum is strong, and therefore we categorize that as impulse move. Okay, so this is an example of an impulse coming down. Okay, this here on the right hand side, you can see that's an impulse move to the upside. Okay, now for some of you who are looking at different time frames across different market, this ability to identify impulse versus correction, you can apply it on any time frame. Next level here you can start to look out for is maybe somewhere around 12,600. Okay, so you kind of get a bit of a downside opportunity if a flag develops. Okay, but you need to wait for the flag. Okay, so that's on Bitcoin. Ethereum over here, is coming down, but you don't want to sell it now, but I just want you to look at the pattern that was developing before that. Okay, so you have this little drop, you have this flag, it tells you downside, right? And it's happening right now. Okay, even if you're looking at smaller scale, can you see that there's this little flag here on 1 hour? Okay, so also downside, right? So the pattern works. Okay, it's not going to be 100% all the time, but whenever you see the pattern, start to be focusing on it. Now, this is an impulse. Okay, so on Ethereum, for those of you looking at crypto, this is an impulse. Don't jump in there. Don't buy, don't sell. If Ethereum were to look for more downside, it needs to first give you a flag. Then you sell it. If you don't see it, don't go and sell it. All right. So I hope that helps. Okay. Good. So those are some of the opportunities I'm looking at. And then I cover a little bit on like gold, silver, and the crypto side. Okay. So hopefully that gives you a clear picture on the application of what we covered for today's sharing. Okay. So we have a little bit more time, so we have about like 15 minutes to 9:30. Okay, so just like to open up and see if you guys have any question. Okay, feel free to type it into the chat, and then from there I'll be able to answer your question. Any question? Or if you have any question, just type it into the chat box, yeah? Okay. Riaz here asks, when is the next session? Tentatively, okay, because I think for October, they're also planning the dates. Tentatively, our next session on October is going to be 3rd of October and 20th of October, right? But I think this one not confirmed yet. Once they confirm it, likely they're going to inform you guys as well. Okay, so for now, tentatively, it's going to be 3rd of October and 20th of October. Okay, any other questions? Okay, Philip here asks, can we pair these indicators along with news like the Fed's rate hike? The answer is yes. Okay, and in fact, I would strongly suggest that you take into account fundamentals as well, right? Last session we cover very in-depth into the fundamental analysis method. Okay, you want to definitely factor that in. For example, okay, if you take a look at this week's let me go there, right? If you take a look at this week's event calendar, right? Especially on Thursday, we do have a lot of fundamental data coming in, right? You have the FOMC statement, Fed's fund rate, you have the Bank of Japan monetary policy statement as well. Okay, you have the SMB, and then you have the Bank of England. Okay, definitely it's going to have some impact in the currency market, okay, because all this decision have a direct correlation with the price of that particular currency. So you want to be aware, okay, of the fundamental side of the market. However, when you come to your trade plan, okay, how you're going to execute the market, some traders prefer to be 100% technical, which means they just purely based on technical analysis to execute their trade. Some traders are going to be a combination of both, okay? So they includes the fundamental analysis to guide them in the direction. So for example, looking at the US, you know that the Feds are hiking rate, and from a fundamental point of view, if the Feds are hiking rate, the dollar is going to be relatively strong. And then if they look at euro dollar, right, then they'll be interested in selling the euro dollar because the fundamental is have a directional bias of that. And then they combine it with technical analysis. So in this case here, we are looking at a flag for euro dollar as well, right? So both kind of like complement and confluence one another. Okay, so that's where you can combine the fundamental. Okay, and then of course you also need to factor in when there's a fundamental news that's important, like what's happening this week on Thursday. It's going to create the volatility in the market. Okay, and that can build up in a chart, right? Volatility means impulse move. Okay, because when there's a huge volatility spike, that's where the market price move a lot in a short period of time. And if you translate that into a chart, it's basically your impulse. Okay, so if you look at euro dollar, for example, okay, if we're going to continue to consolidate like that as a flag, okay, there might be a very nice coincidence where when the Fed funds rate release, if the dollar in fact strengthen, then this can be, on the chart. Okay, it can be on Thursday where the Fed fund rates release. We have a very, very strong dollar. We see this impulse here, right, which kind of completes the pattern of an impulse correction impulse. Okay, again, I want to stress it's not 100%. You're gonna get it all the time. but that's where you can combine, the fundamental and the technical, and then you put them together. Okay, so that's where you want to factor in, right? So again, you need to make a decision as to whether you are more on the technical side or you are more on the fundamental side, or you can balance both. Okay, there's no model answer here. Every trader have their own preference. Okay, so this is the part where why we cover both fundamental and technical, so that you now understand both. You have the option to choose. Okay, you have the power to choose which one you want to emphasize a little bit more. Okay. Diaz asks, what is the best pair to trade? For me, I don't really say like which is the best, because I think every week the opportunity that's presented is going to be different. You really want to identify those that is the clearest to you, right? So if, like, for example, this week here, to me, the euro dollar is clear. The Aussie dollar is developing quite clear. The dollar yen is developing quite clear. Therefore, like this week, some of the best pair I'm looking at is over here, right? Which is those that I've tagged in orange. But maybe next week is going to be different, right? Because next week the market has developed differently. Maybe some pairs are starting to form very clear patterns. Then I'll be more interested in those. Okay. So for me, because I'm looking at 4 hour, every week, the best pair for that week might be different. Okay. And I don't fix the pairs that I'm looking at. I basically look at the entire list of the FX over here, and then I just filter out those that are a little bit clearer and I want to focus on for the week. Okay, so that's how I kind of choose it in terms of like the best pair to be focusing on during that particular week itself. Cool. Okay, so I hope that can give you an answer as well. Okay. Okay, so if there is no question, I hope today's session here can give you some ideas, right? How you can approach the market, give you some learning points that you can take away and start applying it, and hopefully help you in your own technical analysis as well. Okay, so good. That's all that we have. If you guys have no other questions for today, and as I mentioned, October sessions are tentatively on the 3rd of October and 20th. So I think, they will be updating you once those dates are confirmed, and then, we'll see you guys on that date itself. Good. So all the best to your trading, and, we'll see you guys real soon again. Yeah.